Hey guys, this is Jake, and I want to go ahead and talk to the people who may be having a bad week or a bad couple of weeks in the stock market. Specifically, if you've been having FOMO or panic buying and selling, and you feel like you've been buying at the top and selling at the low. This happens to a lot of people because the majority of people lose money in the stock market. But not only that, it happens to a lot of beginner traders, and it happened to me for the first year. And this is a 100% mindset thing. Let me see if I can take about 2 minutes and explain this to you just to go and get you a different idea. So when you're purchasing anything, any sort of business, if you're in the car industry, you want to buy a used car low and sell it high. If you're purchasing a house to live in, you want to buy it for a very cheap or reasonable price and then hopefully sit on it a couple years. In a few years, it'll be worth more. If you sell groceries, you buy them low, sell them high, and that's anything. Used tires, anything in industry. But for some reason, when we jump into the stock market or we make investments, we will buy high and then we will sell it low. So a lot of times we will panic buy it high and panic sell it low, or sometimes we'll just break every fundamental and we'll do that. But it's one of the few things in life. I mean, humans, we do a lot of detrimental stuff, but this is totally 100% contrary to anything you would actually do in the real world. And it just seems to happen when you invest with your money. And if this happens to you a lot, then a couple things you may notice is, for example, like when there's a big IPO, you won't jump into it, but then you jump into it late in the game and lose money. Or, for example, you'll see something on the news 3 days, 4 days, 5 days in a row, and you say, okay, I gotta jump in it, and then you lose a bunch of money. I want you to just do a couple of exercises in this next couple of weeks. It's really like 2 or 3 of them. Rather than going on your screener, whatever it is, Yahoo Finance or CNBC or whatever, rather than going on your screener and looking at the daily most active or the daily gainers, for about a week, I want you to go there and look at the daily losers. Sometimes when we jump in at the top and we look at the gainers, we give them the daily, the stocks that gain the most percentage in the day. A lot of times when we look at that, we get overly optimistic or we're too pessimistic and we wait too long. But if we have those emotions, a lot of times we'll be really good at calling the bottom. For example, like I have friends a lot of times and they'll keep getting kind of in these ruts and I'll be like, hey man, start looking at the biggest losers of the day on Yahoo Finance and go through the biggest losers for a couple days in a row, and eventually you're going to notice you're going to see some good stocks like Tesla in 2020. You're going to say, man, Teslas are all over the road. There's no way this company's going out of business. Or you get sick of seeing, you'll see Amazon and then the news will be beating them up. And you'll be just like, nah, man, that's oversold. That's cheap. So that's what I want you to start looking at. Exercise 1, start looking at the biggest losers. Because you probably have a lot. If you're stuck in a rut, you might be really good at calling the puts and not that good at calling the calls. So try that. Number 2, I want you to start looking at stocks as cheap. So even if you've had really good success for years, you might be stuck in this little rut because your emotions are playing with you. And you might be saying, oh, Rivian. I actually modeled this little thing off the Rivian with the first 2 or 3 days it opened up. You might be saying, oh, Rivian's at 120, it can't go any higher. And then when it goes up to 160, you say, man, it can't stop. And then you fall off the cliff. I want you to start looking at it and saying, is Rivian cheap at this price? Or is this stock cheap? Or when this stock takes this big old dip, because technically you can make money from here to here. You can make money on this dip. You can make a lot of money on that dip. You can make a little money on this dip. So, there's money to be made all over the place for day traders. But I want you to start looking at these stocks. Once you kind of identify the bigger losers, you say, man, these are oversold. These are going to have to bounce back. Like maybe you think that's Peloton right now in November of 2021. You start looking at these, and then once you find something that you think is cheap, that is a good deal, that is a bargain, that's when I want you to jump into it. And like my third little rule, just because like when you're doing this, you're going to notice you're having success because you feel like a lot of the stock market is luck, and I guess some of it is. But like I said, if you have a bad time calling the highs, you have a good eye for calling when these stocks are oversold and they're about to spring back. You're probably going to start getting lucky, but I don't want your emotions to play with you. So I want you to start setting limit sells when you do this. Because like I said, you're going to say, man, this is too cheap. I know there's going to be a spring back. You're going to call it. And then your emotions might say, oh, it's going to the moon again. If you go ahead and identify something as reasonable, as oversold, as cheap, as a bargain, and you go ahead and set like a $20 limit on it and you make your cash and get out, that's such a better way to keep your emotions separated from what's actually going on. Because at the end of the day, when we're trading stocks, everything makes so much sense in hindsight. And that's not a weird phenomenon because everything that's happening is actually common sense. But in the moment of this, your emotions are playing with you so hard that it just, it's not making sense. Nothing's making sense. Everybody in this game almost is irrational except for the few people that are making money. So that's what I want you to start doing. And just to keep you rationally, like I said, remove the panic buy and sell button out of the equation totally. Because once you start doing these 2 or 3 steps and you remove that from there, you're going to see successes, and then you won't be able to blame it on anything else. My name is Jake. I should not be giving financial advice, but I talk about this all the time. I just wanted to share these thoughts with you. If you have any comments, I'd love for you to leave them down there. If you have any, like this video if you can, and subscribe. I'll send a lot more. Let me know what you want to see. And if you hate this video, go ahead and try and knock your boy out in the comments. I ain't worried about it. I love a good YouTube comment fight. So anyway, I'm just joking with you guys. I love you guys. Let me know if you need anything else. Let me know if you want to see anything else. I'll talk to you guys later, and thank you for everything.